Good morning and welcome. It's time for our earnings season special, and Tesla's the big story today. The company reported its Q4 numbers last night, and it was a big earnings beat. We saw a massive gap in terms of the after-hours market. The shares jumping 14%, as high as $660. So, given that they closed yesterday at about $580, it's going to be a big old gap higher when the cash equity market does open later today in about 2.5 hours time. As we said, EPS revenues smashed expectations. I think critically the key thing that we see now is that Musk sees ongoing free cash flow and net income, barring maybe the odd quarter here and there. So that's a key thing, because if they're going to be free cash flow positive here on out, then this is a totally different story to what we've been talking about in recent years. It greatly reduces the risk of the company getting into a mess. Not to say that the share price might be overvalued as such or looking a bit toppy, but the key thing is that if they're free cash flow positive this way forward, then it's looking better. Deliveries this year are expected to exceed 500,000. That would represent a 35% increase on last year. Elon Musk has made this claim before in 2016 and 2018, I believe, and in 2019 too. He's been saying that they would hit 500,000 deliveries. But I think this year, you look at the ramp in production at the Gigafactory in Shanghai. You look at the fact that Model Y is coming out earlier than expected, with deliveries due to begin in March. It does look more promising on that front. Elon Musk on the earnings call saying that really the issue is not demand for these vehicles, it's production. So there is some. He's still acknowledging that production is a thing that continues to be at times a problem for Tesla, but it does look like they have got a better handle on that now. Finally, the short case really is looking weaker now. That ramp, though, does take it into extremely overbought territory, and we just need to be careful about getting carried away with the bull case. As shorts are throwing in the towel, that produces a short covering rally. So I think you need to be careful, but nonetheless, Tesla looking in a very good position versus where it was, say, 9 months ago. Elsewhere, Shell numbers were a disappointment. They slipped. I think Q4 earnings down at 2.9 versus about 3.2 billion expected. Just facing headwinds from weaker oil and nat gas prices. BT also underperforming expectations. Revenues down 2%, earnings down 3%. Diageo is another one. We saw shares actually rally early on, despite saying that it's guiding now for sales growth to be at the lower end of the expected range, between 4 and 6%. And then Unilever today also reporting decent growth, but in the fourth quarter its growth rate has slowed markedly. So full year growth is pretty okay, but the fourth quarter growth was 1.5%. That's underlying sales growth. That's the weakest in a decade, but it was slightly above the 1.4% that was expected by the market. And also they've said that they're going to launch a strategic review of their tea business. Essentially what that means is they're looking to sell it. It's a $3 billion business, and therefore £3 billion business. And therefore I think that's maybe one of the reasons why the shares are doing a bit better today. Hopes that by divesting certain businesses that are underperforming but still solid enough, that it will support the growth profile, and that's really the key, I think. So fair few companies reporting, as I said, on the FTSE. With the Tesla, Facebook earnings last night were weak. The shares were down 7% after hours. Again, that's another one to look out for, gapping on the open, gapping lower in this case. And then coming up today, we've got the likes of Visa and Amazon. Now, Amazon's one that's not really performed as well as some of the other FANG stocks of late. some concerns that it could miss expectations again. So keep your eyes open for Amazon later. That's going to be one that could move the market should it underperform. And that's it for the moment. We'll be back very shortly for our live look at the Bank of England and to see whether it decides to cut rates or not. Thanks for watching.